Welcome back to my personal finance course. I'm Tom Mihawk, and this is the chapter called Risk Management, Introduction to Insurance, Homeowners and Auto Insurance. We just finished the first segment talking about risks and which risks, pure risks, can be insured, and the types of risks, categories of risk management, such as avoiding, reducing, assuming, and shifting. And we discovered that shifting risk is effectively insurance. It's paying someone else to assume the risk or the cost of the risk. This is insurance. The last slide before this introduced insurance companies, and now we come to property insurance. And this is a type of insurance, property insurance, for things, items you own. Typically includes the benefit for the loss of use of the item, loss of its value, or the cost of its replacement. It may also cover liability to you or your property, injuries or something or someone. Legal responsibilities include things like negligence, failure to take reasonable precautions. That's when you're negligent, is when you fail to take reasonable precautions. Strict liability is responsibility for intentional or unintentional events. And vicarious liability is responsibility for someone else's actions or use of your property. The great example for vicarious liability would be you're walking with your young child down the street, and they have a baseball in their hand, and they're walking and they take it and they throw it, and it goes through someone else's window. Well, you're the responsible person, you're the adult. That's vicarious liability. Homeowners insurance and auto insurance are two types of property insurance we're going to talk about. Homeowners is a type of property insurance and insures structures and possessions. Outbuildings, meaning, not your home, but other buildings on your property. And sometimes landscaping and infrastructure like driveways as an example. It might also include valuable possessions like musical instruments, jewelry, furniture, artwork, insured usually with endorsements or riders to the policy. I have, for example, guitars, and I finally had them insured with a rider and or an endorsement. For years I didn't do that, and it always made me nervous. And we have other things covered with these valuable possessions like jewelry, engagement ring, and those kinds of things. Homeowners insurance can also cover hazards such as fire, lightning, windstorms and hail, vandalism, riot and civil commotion, malicious mischief, explosions, and other kinds of things. It generally does not cover floods and earthquakes. So if you own a property at the beach, on the ocean, be aware that you may not have coverage for that. Now, most people who buy in those areas know that because they've been going there before, but just be aware. If you're buying in an area where there's the risk of earthquakes or floods, you may not be covered under typical property insurance, homeowners insurance. And it's important, keep a household inventory. Use your video camera and walk around, take photos, video rather, walk around, record your possessions, and then you can document any losses you've sustained. Do you remember the exact model number or the exact features of everything that you own? Probably not. But with a video, you'll be able to do that, to demonstrate what you lost, if it's damaged or stolen or there's a flood or something like that. The cost of premiums for homeowners insurance is determined by the insured, their employment, marital status, criminal record, credit and claims history. Do they have a lot of claims or very few? The property, the age, the size, the location, building materials. I always think when I talk about this in part of the chapter, I always think of the three little pigs, right? There's the straw house, and there's the wood house, and there's the brick house, right? The brick house is the best built. And so this relates to building materials. Occupants, the systems and the features like smoke alarms and home alarm systems for protection, those kinds of things. And the coverage, cash versus replacement value. Very important difference between cash and replacement value. One can provide you with much less payment should you have a loss. And in particular, it's when there's depreciation that's included as part of the calculation to provide a benefit. And if depreciation reduces the value to some used value, you may not be able to replacement. So replacement value is generally more costly, but should replace the entire lost item. Endorsements I talked about for jewelry and musical instruments and things like that. An umbrella liability is important. Umbrella liability is an extra coverage for amounts you might be sued for above what your insurance covers. It can cover other kinds of liability, like that for coaching activities or your volunteer activities, serving on the board of a nonprofit entity. Those kinds of things are covered with umbrella liability or excess coverage. Discounts are often available for auto and homeowners insurance contracted for with the same carrier. If you have both, you might get a discount if you do them together. Having fire extinguishers, burglar and fire alarms, if you're a long-time policy holder, and if you have systems upgrades like new plumbing, new electrical or heating systems, upgraded systems that will last longer, be safer, and provide for the better maintenance of your home. Renter's insurance. According to the Insurance Information Institute, about 97% of homeowners have homeowners insurance, but only 37% have renters. It's inexpensive. It's a good choice for renters. It insures possessions, but not the property. If you're in homeowners insurance, if you own homeowners insurance, it's to insure the property. Renter's insurance insures your possessions, not your property. But the key thing is, if you're a renter, it's inexpensive. It's a very good choice. Other types of insurance may require more vetting, but renter's insurance can be very valuable. And I've taught students, even grad students who are in their 30s that now have furniture and rugs and things that could be damaged. And renter's insurance is generally a smart purchase. Here's excess liability, a little bit more information about it. Often called an umbrella policy. Covers personal liabilities such as slander, libel, or defamation of character. It may provide additional coverage above that provided by homeowners insurance, protecting in the event of lawsuits, may provide coverage for volunteer activities such as coaching, board roles with nonprofit entities. Auto insurance. If you're a driver at fault in an auto accident, victims have a claim for reimbursement. You may rely on your insurance company to meet the claim. The fault must be determined and the amount of the claim agreed to. About half of states have no-fault insurance that provides for faster methods of covering damages without requiring the court system to determine fault. I was in an auto accident more than that, probably 8 or 9 years ago now. And I was on a busy road, 2-lane highway near construction. I saw the truck, I forget, in front of me. The red lights of their brakes went on. I hit my brakes, but didn't hit them, even though I just made a clapping sound with my hands. I didn't hit them. I stopped. The car behind me stopped, but the car behind that person didn't, and it went poof, poof, poof. Next thing you know, I bumped into the car in front of me. None of us were injured. We all pulled over. The person responsible that didn't stop quickly enough said, "Look, this was my fault." We pulled over because there was an accident. The car in front of me that stopped because there was an accident in front of them. Construction on a busy road, traveling at high rate of speed. We all did our reports with the police officer. Probably, I don't know, a month later, got a knock at my door, my office. They asked, "Mr. Mihawk, can we see you?" Yes. We're representatives of ABC Insurance Company. We want to take a look at your car. They walked around just like the Enterprise people do when you rent a car from Enterprise. They walk around and look for damage. They said, "Your car looks fine. We'd like to offer you a check." They offered me a check. I looked inside. I forget what the amount was, $700 or $800. They said, if you cash this check, this absolves us of any risk. This was their way of exercising the no-fault provision in the man's car who was 2 cars back, that hit all of us or pushed us all together. I had thought about taking my car to be inspected, but I didn't. I was busy. Car ran fine. I accepted the check, which meant that I accepted his offer to not make a claim. This is an example of no-fault coverage, no-fault insurance. All but 2 states, New Hampshire and Virginia, require auto insurance. New Hampshire and Virginia require financial responsibility if you're the cause of an accident, and the purchase of minimum insurance that meets their responsibility thresholds makes them essentially identical with other states. So basically, every state in the United States requires insurance to drive an automobile. Some terms for injuries: bodily injury liability, financial losses of people in the other car injured in an accident that you cause. Medical payments coverage, financial losses due to injuries of people in your car, including the driver, who might be you. Uninsured motorist protection covers the cost of other people's property from damage you cause. Collisions covers the cost of damage to your property. Auto loan lenders require this to protect their collateral, which is the car. If you have a car loan, they want to make sure that it's repaired to its full operating condition should you eventually sell it or pay off the loan. So while you still have the loan, they want to make sure that the car, their collateral, is in good shape. And last, comprehensive physical damage covers losses from anything other than a collision, such as theft, weather damage, acts of nature, hitting an animal. Auto insurance breaks down into these 2 categories: injuries and property damage. It's usually expressed as split limits. When you talk about auto insurance, people say, what kind do you have? Or when you talk to an agent, what do you think you need? Well, I think I need 100, 300, 50, which is what's represented in this slide. The first 2 terms describe the bodily injury liability in an accident you cause. In this case, $100,000 is the maximum that would be payable for one person. $300,000 is the maximum payable to all people in an injury that you caused. The third term describes property damage liability in an accident you caused. In this case, $50,000 maximum payment for damage to other people's property. This is a very common way of describing auto insurance, these split limits. Auto insurance costs are determined by the make, the model, the age of the car. Think of the cost to repair. What's most expensive to repair, a Lamborghini or a Chevy, if there's damage or an accident? And safety features. It's more expensive to insure a more expensive car. The driver, the gender, the age, driving and claims history, driving purpose. Younger males are more expensive than older females. Just the way it is because of their accident history. And the driving purpose. Know that if you drive, very infrequently, that you might pay less insurance than if you drive daily, say commuting to work. The rare driver versus the commuter. Location impacts the rates of insurance too, because of traffic accidents, theft, and vandalism. When I lived in New Jersey, we had more. I couldn't believe how expensive auto insurance was compared to other states that I lived in. New Jersey apparently has higher risk of traffic accidents, theft, and vandalism. Be sure the carrier has a good reputation handling claims. Slow responses, poor service, low reimbursement amounts disrupt your life. And to manage your costs, check your coverage every few years. Change carriers, drive carefully. Be thoughtful about making claims because when you make a claim, it will more than likely raise the cost of your premiums. Take advantage of cost-saving programs like insuring your homeowners with your auto. For students, cost reductions for high grades, low driving mileage. But again, every so often, check in with your agent or with another agent. Double check your auto insurance. Make a change. Oftentimes, auto insurers have low costs to start with. They raise them over time, and they don't think to keep them competitive. If you find a new carrier, you may be able to find a more competitive rate. This is the end of the chapter on risk management, introduction to insurance, homeowners, and auto insurance. I'm Tom Mihawk. You can find me at YouTube and at tommihawk.com. Thanks for watching this chapter, and I'll see you in the next one.